Welcome back. And as President Donald Trump has imposed a 26% import duty on India, let us connect with the management of Pearl Global Industries. The MD and Group President Pallab Banerjee is joining in to decode the impact on India's textile sector. Mr. Banerjee, good afternoon. Thank you for joining in. I'd like to start off by asking you, what do you make of this decision, especially considering the fact that you have a significant manufacturing presence both in Bangladesh and in Vietnam, where significantly higher tariffs have been imposed in comparison to India, although you do have manufacturing operations in India. But what do you make of this move?
It's a good afternoon, first of all. Thank you for having me on this show. Definitely, it's a big step from US President, and I think he's redrawing the entire supply chain of the globe. Of course, it's a start. It's just the start at this point of time, and a lot of things would happen. As of now, I think the tariff that has been imposed for all the countries which is making the apparel across the globe, where the major production is happening, so that's going up significantly. So, and this is the kind of tariff that has been imposed, cannot be mitigated just by changing the supply chain, at the top of a hat. So that means what I'm looking forward to is definitely some kind of inflation that will be passed on, that will happen in the garment prices or the retail prices in USA, which I think he's ready for.
Right. Pallab, like Hormaz just asked you, when you're talking about your manufacturing presence, you actually have manufacturing presence. You have 9 facilities in Bangladesh subject to higher tariffs. You have facilities in Vietnam as well. They too are subject to higher tariffs. So relatively, it appears as though Pearl Global is most susceptible to higher tariffs compared to your own Indian peers as well. So number one, what is the percentage of exports you do to the US market from the facilities outside of India? And do all of those exports go mainly to the US markets? And how will you mitigate the impact that you're going to be seeing from the higher tariffs?
Yeah. So our share in the US market, that means our goods that is going into the US market, is close to about anywhere between 45% to 50%. There are certain global brands which operates out of US. We are supplying to them. That percentage sits with us about close to about 60%. But the goods that is going inside the US would be less than 50%. Now, the countries like Bangladesh, which had a duty advantage or GSP advantage that they had for countries like European Union, UK, and all these Canada and all. So naturally, the business is more from there compared to US as a market. If I talk of India, India has been more exposed to the US market. Talking of Vietnam, that would be again more to the US market, because Vietnam, we make some specialty product which is not possible anywhere to make apart from China. So that's how our business strategy has been. And so that's how the distribution has been. Now, talking about tariff, you have to understand the whole thing, that if you look at US statistics, US imports about $90 billion of apparel. If I talk about only my industry, which is apparel. So out of this 90 billion, almost 21% is coming out of China, and followed by about 18%, which is coming out of, Vietnam. Another maybe 9% is coming out of Bangladesh. If you look at this, between these 3 countries, almost 50% of the goods is going into USA. And the numbers are substantial. If you see, China does about close to $18-19 billion of goods which is going into US. Similarly, Vietnam would be another $16-17 billion. Bangladesh would be another $10 billion. So this is the kind of FOB that is going in from this. If I talk of that 90 billion, so these numbers cannot be shifted overnight.
Right.
Cannot be formed.
Mr. Banerjee, sorry to cut you in. I was reading through your previous quarter earnings call where you had mentioned that as your order book, your share of US customers to non-US, US based customers to non-US based customers is 65-35. 3 years back, it was 85-15. Now, when these tariffs kick in, what does it do to your business, your company in general? Because would that number come down further? Would you be turning focus more towards a domestic focused business? And once these tariffs also kick in, and potentially if you do have to end up paying higher tariffs for exporting from Vietnam and from Bangladesh, What does that do to your overall projections? Because you had also made a projection that you plan on getting on to revenues of around 6,000 crores by FY28. What does that do to those targets?
So I don't see any change immediate. Of course, there will be a lot of changes that will be happening from going forward. But for the next 2 to 3 months, I don't see immediately like things will change drastically. US have to wear the garments and they have to import the garments. And fortunately or unfortunately, whatever you say, the 50 to 60% of the garments is coming or going from Asia. Yes, what will start happening over time is that the countries which has got lower tariff, the brands or the retailers would try to be more exposed into those countries. But those countries have to build up the infrastructure to supply the apparel. So as I was talking about the numbers, if you see like it's a big number of $45 billion that is coming from these countries, which is now getting a tariff of 45% extra tariff that they have to pay. Now that cannot be like overnight shifted to a country which doesn't have which are the countries that are attractive now. A Turkey or a Central America or maybe an India, which is at 26, lower than the others. But hardly we have any manufacturing setup which can give these big numbers. Of course,
understood
that our number in India will go up, significantly at this point of time.
Pallab, right. Pallab, one question. We also understand on the back of these tariff imposition, we understand that there could be a certain impact as far as demand is concerned. We also understand in order to mitigate the impact, there will be certain price hikes necessary. Do you feel that customers are well placed to absorb these price hikes? What percentage of the incremental increase in tariff can be passed on? What is the hit you will have to take to margins in case you are not able to go ahead and fully impose or fully pass on the price hikes? And also, for Pearl Global, could you give us a consolidated or what will be the effective tariff that is applicable to you post this imposition, given the fact that you have multiple facilities across the globe?
See, first of all, the tariffs are not paid by us.
Right.
The buyers, the retailers and the brands,
absolutely,
when they import the goods, that's the time they pay the tariffs. Now, let's say a company in US, which is importing goods from us or anybody else, they would be paying this additional tariff. If they're taking the goods from India, the additional tariff comes out to be 26%. If they're taking the goods from, let's say, the other country like China, then it's 54% additional tariff that they have to pay. Now, that's why I was talking about like a 45% additional tariff, let's say the average from this main manufacturing countries of apparel, that cannot be absorbed by the retailer or by the supplier. Because if you do the maths, then that 45% means like 15% at the retail level.
Right.
To 15% of the price increase, the cost of goods that is going up by almost 45%. That will impact, normally it's 3x. Let's say a $10 garment where the American retailer have paid a duty of 17%. I'm talking about cotton garment. Let's say this cotton shirt. When it's imported into US, if it's landing at $10 after paying a 17% duty, now there will be an additional duty. If you're taking the goods out of China, Vietnam, Bangladesh mix, 50%, that means the effective tariff comes out to be almost 45%. Now that means this $10 garment will be sold, let's say 3x. That's an average if you talk about, I'm just generalizing the whole fact now.
Okay.
So that it will be sold at $30. So that means this 45% effect is 15%. Now the supply chain will be working on how to mitigate this risk. 15%, that means even if it's divided, let's say for a hypothetical situation, 7.5% absorbed by the retailer and 7.5% absorbed by the supplier. Now both this company cannot survive by absorbing from the bottom line 7.5%. So naturally, this will be passed on to the consumer. And what portion of it, whether 10% of it, 12% of it, 8% of it, that's something we will see over these next few months that will be looking out. Now, so is looking at this 7-8% or 9% kind of inflation in this particular category and similarly some other categories that's getting imported. That's one of the hypothetical situations that I can think of. Now, as a company of Pearl, what should be my mitigation risk? Yes, we have been working from, we have already decreased from that 85% to our dependence into US market. US in general, like the goods that is going into the US would be just below 50% at this point of time. But US-based customers, still we are at 62% approximately. So now that number will continue to fall for immediate effect for me, for my benefit, for my company's benefit. But then over time, this is the biggest retail market, the biggest consumer market. So we cannot it, we have to be in synchronizing what's happening out there. So according to me, some of it will be passed to the inflation, and this scenario of the supply chain will be redrawn.
Right. There are plenty of questions, Pallab, but we're running out of time. But thank you so much for sparing time and joining us today. Wish you good luck for the rest of the financial year as well. That was the management there of Pearl Global in the line of fire. Actually, it's 17% lower now. One of the few garment exporters that are underperforming in today's trading session. We take a short break, and we'll be before we take that short break, as the 350 points down now on the index, and of course to 22,900 is where the index is now, and a very key support level is where the Nifty currently stands at. Take a short break. Back on the other side.